everyone, and thank you for watching my videos. In this video, we're going to learn how mathematical formulas and calculations can increase our profits and give us more opportunities to earn more successful trades in the Forex market. Many investors rely on the discoveries of Fibonacci, and this is a great opportunity for us to study his works as well. Now, who is Fibonacci? Fibonacci was a great Italian mathematician who is responsible for discovering the golden ratio. The golden ratio involves a sequence of numbers, and by comparing the ratios come out to be exactly the same, 1.16 and a series of decimals. The golden ratio can also be called the golden mean, and the Forex traders, they use this information provided by Fibonacci's discoveries to maximize their profits. This is also a great tool that we must understand and is also provided to us in our trading platforms. Now, how do traders use Fibonacci? Traders use Fibonacci to find potential support and resistance levels. And where do we take our profits? When our open positions are successful, where do we close so we don't lose much of our profit? And also, the calculations, as I said, are included in your trading platform. So we don't need to carry a calculator every time we make trades. When the market is in an uptrend or in a downtrend, we can use the Fibonacci retracements. It is not recommended to use this while the market is going sideways. So, in the next slide, we're going to examine how swing highs and swing lows can assist us in finding Fibonacci retracements. What is a swing high? A swing high works like this. The candle that's in the middle, that candle has a higher high than the two surrounding candles. That is called a swing high. Swing low, on the other hand, the middle candle has a lower low than the two surrounding candles. Now, in the swing high, we see this when the market is changing direction. And also, with the swing low, the market is also changing direction as well. So, how to find an uptrend? Well, here we have the swing low, as I showed you in the previous slide. And also we have the swing high in the upper right-hand corner. So, we completed the first step. We found the swing highs and swing lows. Then, we click on the swing low, and you'll have this opportunity to do this on your trading platform. You should be able to click on the swing low and drag a line to the swing high. As you can see, I have a line connecting the swing low to the swing high. And then from the swing high point, we have our Fibonacci retracements. We have our 23.6, we have our 38.2, we have our 50%, we have our 61.8%, and our 76.4%. And we're going to watch how the market reacts to these lines. Notice that at this line, the market has pulled away. And then we get to the first line of support. Notice that on the first line of support, there was some major support at the first three testings. Now, at the fourth testing, the line completely broke. But to the second line, the 38.2% line, that line provided major support and pushed the market upward. Now, finding a downtrend. Well, it's the same way as finding an uptrend. We start with the only exception is we start with the swing high first. Then we go to the swing low. And then, as you can see, we have our line connecting the swing high and the swing low. And then we have our levels, the same levels that we had in the uptrend, but this time these are the levels of resistance. So we found the swing low, and again we have our 23.6%, our 38.2%, our 50%, our 61.8%, and our 76.4% line. And again, we don't have to calculate these numbers. Your trading platform should provide the calculations for you. So we have several lines of resistance with the Fibonacci retracements on the downtrend. Now, let's see what happens. Okay, so after the swing low, the first line of resistance was broken, the second line of resistance was broken, but the third line, the 50% line, that line held, and the market pushed downwards, and the trend has continued. So as we can see, the Fibonacci lines, they can help us immensely. Now, what have we learned? We've learned that Fibonacci retracement levels can help us find where support and resistance. Now, I've mentioned many times about support and resistance. It's really important. However, support and resistance, they're still not perfect. And remember, support and resistance are more than just lines. They can be zones as well. As we saw in the previous charts that I showed you, some of those lines that we saw can actually create zones for us. So remember, support and resistance lines are not exact. And we still don't know which line will be the line of support or the line of resistance, but if we combine our technical analysis with our fundamental and sentiment analysis, we can still use all of those tools to open our position successfully. How do Fibonacci numbers work? So, for example, we have a 0 and a 1. And then we add 0 and 1. 0 plus 1 equals 1. So, now we have 0, 1, and 1. We put the sum after the second addend. And then we add the last two numbers. 1 plus 1 is 2. And then we place the 2 after the second 1. So now we have 0, 1, 1, 2. We add the last two numbers, 1 and 2, that gives us 3. We place the 3 at the end of the 2. So before we had 0 and 1, now we have 0, 1, 1, 2, 3. We continue the pattern again. Add the last two numbers, place the sum after the last number. And we can continue that with 8. And if we continue this even further, look at the numbers that we get. Now, here's a formula to understand this more. So the function of a number equals the function of a number minus 1 plus the function of a number minus 2. So here I'm going to show you some more examples of why this is important. Now, as we saw in the previous charts, these percentages, the 23.6%, now in an uptrend, the 23.6% was our first line of support. Our second line of support was the 38.2% line. The third line of support was our 50% line. The 61.8% was our fourth line of support, and our 76.4% line, that was our line of support. Now, in a downtrend, the 23.6% line, that would be our first line of resistance, then second, third, fourth, and fifth. Now, I put these numbers, these are the same numbers that we saw in the previous pattern. Now, what happens when we divide 144 by 233, 233 by 377? What happens when we divide the numbers that are next to each other? The answer is 0.618, so 61.8%. Now again, These are all discoveries made by Fibonacci. Now, here's the formula that we use to calculate this. So, what happens when we divide every other number? 144 divided by 377, we get 0.381 or 38.2%. And again, here's the formula. So you can see the Fibonacci retracements are related to the discoveries made by Fibonacci, the great Italian mathematician. And we do the same thing here. So if we divide every third number, the answer is 0.236 and 23.6%. And there's the formula to give us this information so we can understand it more. And 76.4, that is 23.6% backwards. And for those that really want to use math in order to increase our chances of success, I even placed in these numbers as well. Do we need to know these formulas? No, we don't. Again, our trading platform does all of this automatically. Just find the swing highs and the swing lows and connect the two with the line. And your trading platform will take care of everything from there. So, that is the good news for those that are bad at math. So, don't think of this video as a math lesson. Just think of this video as how we can use math to improve our chances of making successful trades in the Forex market. Now, no tool is perfect, and remember, the Forex market, it is not guaranteed either. So, nothing is certain. Fibonacci will not work all the time. Sometimes Fibonacci fails us. Now, here's an example. Here we have a downtrend. First, we connect the swing high with the swing low. Here we have our levels of resistance. Now, from the retracement of the swing low, the first line of resistance was broken. The second line of resistance was broken. However, the third line is holding. So, what happens? Well, unfortunately, that line has also broken through. A new uptrend has started, and had you decided to short, you would have lost all of your money. So again, there could be several reasons why you were wrong. Maybe you forgot to read the report on the Tokyo machine orders, or maybe you misread the report on the unemployment rate in the United States, or you misread the report from the British Treasury. So again, Fibonacci gives us really good technical analysis, but we still need the other two, the fundamental and the sentiment analysis. So don't forget that. Okay, what have we learned? We learned that Fibonacci retracement tools are just like any other tools, like the support and resistance. Those are tools. The Japanese candlesticks, those are tools. And we're going to have many more tools that I will show you in future videos. They work, but they're not guaranteed to work. Also, we've learned how to identify the swing highs and the swing lows. This is very important when we're using Fibonacci. We have to know where the swing high is and where the swing low is. And they have to be exact. No exceptions. A swing high can be at the end of an uptrend as well as the start of a downtrend. So, either a swing high or a swing low can either begin a trend or end a trend. So, keep that in mind. Now, using Fibonacci to improve the odds of success. We found our uptrend. We start with the swing low, we have the swing high. And we have our levels of support. And it's a strong trend too. Now, where and when do we enter? We have an uptrend. And at the end of the swing high, the buyers have stopped pushing the market upward. Maybe it's still a buyer's market, but The buyers are probably taking a rest right now. And the sellers are stepping in, trying to push down the market, but the buyers will not allow the sellers to push it down too far. However, the sellers are gaining momentum. The first line of support broken, and it looks like the second line of support is about to be tested. So, before we have resistance, but will this line of resistance turn into a line of support? As we can see, the 50% line, the third line of support, which was the third line of resistance, was tested once, twice, 3 times, and held. It just turned out that the buyers were still in control of the market, but the buyers did not have the momentum to push the price higher. However, the buyers saw that the sellers were gaining momentum, so they immediately stepped into the market and took offense and pushed the market upward. So, if we decided to go long at the 50% line, we would have made a serious profit. Now, what have we learned from that situation? We've learned that previous support and resistance levels would be good areas to buy and sell because other traders are eyeing these levels. Now this is an example of sentiment analysis. Trading based on how people feel about the market. So we're using other people's emotions to our advantage. So with traders looking at the same support and resistance levels, there's a good chance that there will be many orders there. So again, these are great examples of sentiment analysis. So think about this. We know about support and resistance, and we know about Fibonacci, and we know how to read Japanese candlesticks by now. Many traders, especially amateur traders, are going to use the basic tools in order to open their positions at the right place in which they are satisfied. So, when we look at the Fibonacci lines, we have to remember strength in numbers. When we look at the Fibonacci lines by connecting the swing highs and swing lows, millions of other traders just like us around the world are looking at the charts the same way. And they're thinking with the same mindset that we're thinking with. So, when we see a market heading towards one of the lines of resistance or support, we should think to ourselves, the millions of other traders that are looking at this line, what are they going to do? So remember, trading is all about probabilities. Using Fibonacci can enhance the chances of successful trading, but nothing is guaranteed. Fibonacci is one of the tools that we can use, and there are still many more tools out there that we must master in order to have more successful trades. Now, Fibonacci with trend lines. In our previous video, I showed you how to draw a trend line properly, so I'm not going to get into that here. So we have our rising trend line, and first, after identifying the trend, which is a bull market, we've identified the swing lows and the swing highs. That's how we got our Fibonacci. Now, here we have our trend line that is crossing over one of the lines of support. What would happen to the market if a rising trend line crossed over one of the lines of support? Would this be a good place to buy? Well, let's see what happens. It was a great place to buy. Here, we have a crossing, the trend line crossing over the third line of support. Now, the first line of support was broken, second line of support was broken, the third line of support was tested, but here comes the rising trend line, giving us the signal to go long. And had we gone long right there, look at all of these green candles. We would have made a serious profit. We have a swing high all the way up here and a swing low, a pretty long downtrend. Now, how do we invest in this trend? We have our swing high, swing low, and here we have our 5 lines of resistance here in this downtrend. So, here the market is retracing from the swing low. It crossed over the first line, crossed over the second line, the third line, and crossed over the fourth line. But here we have a doji. The doji is right on the fourth line of resistance. It's interesting how this could be right on that line of resistance. Let's see what happens. Now, before we go to the next slide, what would you do? Would you short this pair? Would you go long on this pair? Or would you wait around to see what happens next? Well, let's see what happens if we short the pair. And success! With that doji right on the fourth line of resistance, here come the sellers to push down the market. Now, what have we learned from this experience? We've learned that looking for fib sticks can be very useful, and they can signal whether or not one of the levels will hold. And it seems like when a price is stalling on the level, that could mean that the line of support or resistance is holding strong. So we can either wait for a fib stick to form right below or above the fib level to give us a confirmation, or we can wait to see whether or not we should place the order. So it's up to you. And again, this goes back to using technical analysis or fundamental or sentimental analysis, using all three at the same time. Now, if a fib stick does form, you can just enter a trade at the market price since you have more confirmation that the level could be holding. So what this means is we look at the lines thoroughly to see how well they're holding. And we can either play the bounce or play the break, depending on how well we've studied the market and how well we can identify how strong the trend is. Now, let's talk about Fibonacci extensions. Fibonacci extensions, it works like this. From here we have an uptrend, the swing low, and the swing high. Now, with the swing high, we extend the numbers past the swing high, giving us even more levels of resistance. Fibonacci extensions are a useful tool in determining how much of a profit we can take. Now, we've identified the swing low here and the swing high up here, and the market is still trending upwards. The 50% line, the third line of support, has been tested 3 times. And after that third time, the market shoots up again and past the 100% line. And now we extend the Fibonacci past the high to see where we can take our profits. So if you notice, we look at these lines carefully to see how the lines of resistance are holding. And depending on how strong the lines of resistance are holding, that should tell us a good area to take our profit. Now, we saw what to do in an uptrend. We can even use Fibonacci extensions when we are shorting up here. So, here we have the downtrend. We have the swing high first, the swing low second. And we see that the lines of resistance have been tested. So, and it looks like the buyers are exhausted, So the sellers are stepping in to push down the market. And the market has pushed past the swing low. So just like we did with the uptrend, we can use Fibonacci extensions on the downtrend to give us extra lines of support. And we examine those support lines thoroughly to tell us where can we close and take our profits. So here's what we need to know about Fibonacci extensions. There is no way to know which exact Fibonacci extension level can provide resistance. Again, nothing is 100% in this market. We're only improving our odds and enhancing our performance in this market. That's all we're doing. And another problem is determining which swing low to start or finish with, and also which swing high to start or finish with. So again, nothing is 100%. Now, this is important, and I've mentioned in the previous videos how important stop loss is. So we can even use Fibonacci to reduce how much we are losing. So let's say you enter at level 0. Now I highlighted this in green to symbolize the uptrend. So we're using Fibonacci in an uptrend. If you enter at the 0% level, you want to set a stop loss at the 23.6% level. That is the level, the support level below. Now, the 23.6% line, you want to put a stop loss at the support level that's below. And it continues through all of the lines of support on an uptrend. And as we can see, here we have a downtrend. So we start from the swing high all the way down to the swing low. And we can use any of these. Now, if we decide to short this pair, we can look at these lines, examine them, and they can tell us where we can put our stop loss. And now, here I made a list for possible stop losses in the downtrend. Now, if we look right here, here's another downtrend. And by looking at these lines, we have an idea as to where we might be able to put a stop loss. Now, combine the Fibonacci retracement tool with other support and resistance trend lines and candlesticks. That will give us a clear idea as to where to open, close, place a stop loss, or to take our profits. So we don't want to use just one tool or one method. We want to be able to combine methods. Now remember, we must combine technical, fundamental, and sentiment analysis. We combine that with the support and resistance and with the knowledge of Fibonacci retracements. Now, and as much as possible, we don't want to rely only on Fibonacci levels for lines of support and resistance, because Fibonacci does fail us sometimes. And again, when we study the market carefully and when we study the patterns of the Japanese candlesticks carefully, we also have an idea as to whether or not it's a good idea to even enter the market in the first place. Now, to sum up everything that we've learned in this video, we've learned about Fibonacci. We learned how Fibonacci can be used to enhance our ability to make profits and to enhance our performance as Forex investors. So Fibonacci is important. And because many traders use Fibonacci, we can even use sentiment analysis as we're looking at the lines. Now, as the market hits one of the Fibonacci levels, think to yourself, what are the millions of other traders that are looking at the same exact charts that I'm looking at? What are they thinking, and what mindset are they in? That's sentiment analysis. And when you were using the Fibonacci tool, combining that with the ability to make trend lines in channels, we're increasing our chances of success. So remember, nothing is guaranteed, but we can always tip the odds in our favor. Thank you for watching.